the reality is that the UK is a low growth economy at this point. And as you and your colleague previously said, it's all very well wanting growth. How you achieve it is another one. And the policies being put forward don't really add up from an economics perspective. Yeah, it's going to be very challenging.
I want to ask you about the line that I thought was directed, namely at bond vigilantes, the people who've been watching the gilt market very closely. She says, I believe in fiscal responsibility, I believe in sound money, I believe in a lean state. Does that resonate well with fixed income investors like yourself?
I mean, the line itself absolutely does. And I think it's the line that needed to be delivered. But the challenge that she has is that, and the party and the Tory party have, is that the policies they want to produce are not consistent with that. And this is the reason why the gilt market had a major spasm 10 days ago when they initially announced their mini budget. And if we listen to what they were saying today, she's announcing a serious amount of, increases in things like defense spending. She wants to get rid of the backlog from the NHS. She wants to achieve all these things, all of which will cost money, but she wants to do it with less coming in terms of tax revenue. So the balancing item, of course, is growth, and their policies are, let's say, hazy to say the least. And so, it will be absolutely critical to see what the Chancellor has in terms of his medium-term fiscal plan, because it looks like there's going to have to be some fairly significant public spending cuts, and those are going to be very politically unpalatable. Yeah,
there appears to be a special magic money tree that the Prime Minister is producing right now. We just need to figure out where all the cash is coming from if they're not borrowing it. What is your outlook on the gilt fixed income market from here? Obviously, we have seen some support come through because of the Bank of England stabilization measures, but those are going to run out on October the 14th. So where do you see the passage for gilt yields going?
It's extremely uncertain, but the most likely outcome is that we are going to see higher yields through time. The amount of issuance into the market is increasing significantly. We obviously have the Bank of England buying bonds right now to stabilize the long end, as you said, but they want to turn that off in the next 2 weeks, and then they want to turn around and start selling bonds as they had initially planned to at the beginning of this month, at the start of next. So, the reality is there's an awful lot of issuance to absorb, and this is why it's absolutely critical that the Chancellor, when he announces his medium-term fiscal plan, really demonstrates how they are going to achieve that fiscal responsibility, because that will be key. And I think, right now, I'm not sure you're going to see an awful lot of credence from the market in terms of lower yields until we actually get the details later on this month, hopefully. And it's going to be interesting when they stop the program on the 14th. Just what happens. I don't get the sense that people are particularly keen to step in at this point.
She also talked about the Bank of England and that the Chancellor is working with the Bank of England, but of course they respect their independence. But that, of course, is the other side of the equation here, because on one hand, you've got the government wanting to stimulate growth. On the other hand, you've got a Bank of England who are being forced into a corner to hike more aggressively. That is actually going to impact growth negatively. What do you expect out of the Bank of England at the November 3rd meeting?
Yeah, we're expecting a bigger increase than we've seen previously. The range of possible outcomes is sort of 75 to 100, most likely at this point. Obviously, again, it's going to matter an awful lot as to what the Chancellor announces in his medium-term fiscal plan, which is why right now markets are extremely uncertain. But the Bank of England certainly has a job to do, and they've been very clear that they will do it come what may. So, the independence of the Bank of England is reassuring to markets that the government and the Prime Minister has re-emphasised the independence of the Bank of England and its ability to set interest rates without meddling from the government. But it also obviously poses quite a significant risk, especially if they don't demonstrate, how they're going to achieve their growth plan in a consistent and, orderly manner.
Let's talk about the pound, because we have actually come a long way upwards since we got to those record lows versus the US dollar the Monday after the mini budget. We're about 7 points higher, 7 to 8 points higher. But again, talking about the pound, analysts that I speak to tell me that the major concern is the current account deficit, the fact that there is still going to be a lingering fiscal deficit ahead, and of course the strength of the US dollar. So what stops the pound's decline from here?
It's a good question. I mean, I think, we've been mostly focused on the sterling dollar cross, and obviously there, the dollar has been the dominant driver. So, I think the UK is not really going to be probably the focus in terms of stabilizing where GBP USD ends up. When we think about the pound more broadly, obviously the moves have not been as significant. So versus the euro, the pound has obviously weakened, but it's come back somewhat since the sort of the events of last week. I think the reality is it's quite a challenging environment for the pound, though. So we're not expecting a stronger pound until at least the market gets some confidence in what the government is doing and whether it's going to actually work or not. So right now, I would expect the pound to weaken.